Abebe Selassie, welcome to SABC News. Thank you for your time.
Thank you so much, Sherwin. Thank you for having me.
So I guess the big takeaway from the IMF's latest regional economic outlook for Sub-Saharan Africa is how the trajectory of the COVID-19 pandemic, A, and B, climate change, will shape this region's economic future. Speak to this uncertainty and the risks that the report says, quote, are tilted to the downside.
Thanks, Sherwin. So yes, right now, I think the key challenges facing in the region, Sub-Saharan African countries, in the near term, of course, is making sure that this pandemic is behind us and we have a decent economic recovery. And then second, to begin to address the more medium-term challenges. Now, speaking to the first issue, I think one good piece of news is that we are seeing a recovery in the region, quite varied pace across the region, but overall the region we expect to recover by about 3.7% this year. This contrasts with the very large contraction we saw last year of the order of 2%, the first ever of that magnitude in the region going back 50 years. So piece of good news recovery. However, this recovery falls short of the kind of recovery we're seeing elsewhere, advanced countries expanding by around 6%. So there is actually quite a lot of gap emerging between advanced, largely emerging market countries and our region. So that is a cause for concern. And, basically the reasons for this are the fact that we haven't had enough vaccination access and also not enough supportive monetary and fiscal policy stance. So these are both areas that need very, very quick addressing.
Correct me if I'm wrong here, but the argument that I'm seeing is that the sub-Saharan recovery that we are seeing is because of piggybacking on what we are seeing in China and the United States. It's being driven by what we are seeing in advanced economies. Is that not a fair statement?
As always, the extent to which external factors drive the recovery in countries across the region depend on how closely integrated countries are to the leading economies in the world. So, some countries which do export quite a bit to China, Europe, the US, will of course piggyback from any recovery. So, that provides some potential upside for commodity exporters, for example. But, in more diversified economies, what happens domestically counts as much for the recovery as the external environment. And what we are seeing across the region is indeed that, the more diversified economies, we didn't have as big a contraction and are recovering more quicker. And the more commodity-dependent countries are continue to go through a difficult time. They were hit very badly last year, and while recovering, they still have some ways to go. So, but overall, indeed, the global environment does have a bearing in our region also.
The report points to the fact that over 30 million people in the region have been thrown into extreme poverty as a result of the pandemic. The pandemic, it says, has worsened inequality, which could add to the very real risks of social tension and political instability. To what extent is the IMF concerned that matters could very quickly spiral out of control?
I think this perhaps is the darkest side, and really, we talk about GDP numbers, but at the end of the day, economics is about, standards of living improving. And what is really sad about this pandemic is the fact that, we had a trajectory where, it varied from country to country, but we were overall seeing poverty rates declining. What this has done is to reverse that trajectory overall for the region, and about 30 million people, as you quote us, have been added to the poverty numbers. And that's coupled with, of course, now increasing pressures that we're seeing from higher fuel prices, which of course have an effect on the cost of living, as well as, and this is the more insidious part, higher food prices in quite a large number of countries. So a combination of this is going to make standards of living difficult for our people, which is why, again, more reforms, more concessional financing will be imperative to support the region have a stronger recovery as we're seeing elsewhere.
Take South Africa, Abebe, where we have an official unemployment rate at around 34%. Of course, the unofficial rate might be even higher than that. youth unemployment at a rate of close to 70%. The IMF expects South Africa to grow by 5% this year, but the outlook is weighed down by the combined impacts of the COVID-19 third wave and the unrest experienced in our country in July. Growth expected to drop to around 2.2% next year. What is the scenario those numbers speak to for Africa's advanced economy? 2% we all know is not going to be enough in terms of achieving the SDGs, for example.
I mean, absolutely. I mean, if you ask me what the central policy objectives challenge in South Africa really is growth and jobs, right? I mean, because the two are related. Jobs, which will be, which can only be facilitated by more robust economic activity. Now, in terms of the numbers, so the good part is that economy we expect to recover, to expand by about 5%. An important reason for this really is a rebound from really the very, very weak levels of activity we saw last year as the economy's been reopened, the restrictions have been lifted. But there's also a statistical artifact. There was a nominal GDP rebasing, which has a level effect this year, so raises growth level a little bit. So there is that effect also. And going forward, we expect growth to come back down to what we've been seeing pre-crisis, around the 2% or so mark. I think this really points to the need for really very robust reforms in South Africa to facilitate a higher growth. Productivity has been very, very anemic. There's a need also to, foster competition, particularly in product markets, which have been quite sclerotic in South Africa. So, I think short of those kind of reforms that will raise productivity in South Africa, we're not going to be able to address the huge employment challenge we have there. And I think that needs to be where the laser-like focus needs to be on in the coming years.
We've talked for over a decade, at least, about the urgency with which economies like South Africa need to, as you touched on earlier, structurally reform away from their over-reliance on commodities. And yet your report says these reforms are expected to remain limited. What are the real-life implications of this limited transformation that is so needed in South Africa?
I think we make this point to set expectations, as it were. I mean, not because that's what we hope will be the outcome, but rather to say that, absent these robust reforms, growth will remain anemic, adding and compounding the difficulties that were evident pre-crisis. Okay, so as you said, to be very clear, even before the crisis, many of these reforms were needed. Now that the crisis has come, reduced fiscal space, but also, is causing all kinds of shifts in economic activity, in globalization and supply chain resilience being tested. For all of these reasons, I think our countries need to be thinking about a new development paradigm, a new development trajectory, and in particular, a laser-like focus on the factors that are holding back more investment, more economic activity. Absent that, I worry that we will continue to see very anemic growth with attendant likelihood that we will not reverse this big spike in unemployment that we've seen.
The report also says that without external financial and technical assistance for Sub-Saharan Africa, the divergent paths of recovery may harden into permanent fault lines, jeopardizing hard-won progress and by extension undermining progress towards the SDGs that were lagging even, of course, before the pandemic. Abebe, what does the external financial and technical assistance look like?
Okay, so, if you'll allow me a moment, I think, a big challenge that we saw pre-crisis was, countries were doing their utmost to invest in infrastructure, in health, in education, and did quite a bit of this. But the cost of financing they faced was fairly high. And of course, with the pandemic coming, that has exacerbated the debt levels in the region and debt vulnerability challenges. I think going forward, it is going to take some time for revenue base to increase, tax revenues to recover. So I think concessional financing from the outside has an important role to play to bridge countries' ability to rely solely on private or non-concessional type financing. How does concessional financing do that? It reduces the cost of borrowing. It reduces, it keeps it contained, and so gives, our countries breathing space. I mean, South Africa, of course, has very deep and liquid financial markets, and it doesn't need as much concessional financing. So, subject to economic policies continuing in the direction the government has committed to. But most other low-income countries in the region can do with a lot more financing to exactly be in a position to meet the SDGs by 2030, as we all hope they will.
Well, given this limited fiscal space, the IMF says $450 billion over 5 years for the region, right? I mean, that's the number you've put out there. Where's that money going to come from?
It's going to have to be a combination of, significantly more external official financing, both from entities like the IMF, but also the World Bank and other multilateral development banks. Private sector financing, of course, has a role to play also. And bilateral support from countries will also be very important. Just one thing I want to say here is, of course, we're not kind of just standing still, but contributing quite significant amounts to this financing agenda. I mean, last year to Africa as a whole, we extended about 30 billion in emergency and regular financing, about 13 times what we normally would in a given year, given the scale of the challenges. That was appropriate. This year, we continue to provide significant financing, and that's been supplemented by the recent SDR allocation, which has provided another $33 billion for Africa, another very important shot in the arm for the financing needs of countries to help address exactly the challenges that we see in the region, vaccination, supporting vulnerable people, and indeed other demands.
The African countries will argue that despite the SDR allocation, most of that money based on the quota system at the IMF has gone to countries that need it the least. How do you respond to that criticism?
As you said, general SDR allocation is made on the basis of, the shareholding, the quota that the countries have.
Which means poor Africa, right? It means poor Africa in that sense.
Yeah, but we're not stopping there, but rather very much hoping and advocating and really working flat out to find mechanisms by which countries that do not need these allocation as much as our countries do, can on-lend them and rechannel them to countries that need them. And one of the big outcomes of the recent annual meetings, I think, was indeed broad endorsement of reallocation from countries that don't need them towards our countries, low-income countries more generally. And we've made very, very good progress in this regard. Very good progress. I mean, a lot more progress than I had expected a few months ago.
Couple more questions for you before I let you go. The UN Secretary General Antonio Guterres says that if debt distress is left unchecked, it would be a dagger in the heart of the global recovery, calling for a quantum leap in support. We note the G20's debt service suspension initiative for eligible countries until the end of 2021. But your report calls for a common framework on debt treatment to be made fully operational. Explain how that should happen beyond the suspension initiative.
Okay, so very good question. So, the Secretary General is absolutely spot on that those countries that need their debt, where their debt is unsustainable, we need prompt debt restructuring. Okay, absent that, countries are not going to be able to have access to more financing. And indeed, it basically means that when a country's debt is unsustainable, the burden of adjustment falls on its people, okay, to continue servicing an unsustainable level of debt. So, frameworks, mechanisms to allow prompt restructuring of unsustainable debt, in particular, is very, very important, which is where the common framework comes in. I mean, the common framework basically is a vehicle where all of the G20 official creditors have said that any obligations that are outstanding to them in circumstances where a country seeks an IMF program, where debt pressures are really very significant, can be used. They will use this framework to make sure debt is sustainable, and will expect the private sector to do the same. This is exactly the kind of framework we need, but we need it to be more agile, more nimble, and more timely to allow us to support countries when debt difficulties emerge.
The report also says the region's potential remains undiminished, but that capitalizing on this potential will require bold, transformative reforms, no less around adaptation and mitigation to climate change. That means money from outside. We're just a few weeks ahead of the COP26 climate conference in Glasgow. What's your sense of where we go from here?
So, I think what we're hoping is going to be clear to everybody is that we all live on we've titled our report, one planet, two worlds, and three stories. The one planet story is that we all live in this world where, whether it's pandemic or indeed, addressing climate change, unless you address the difficulties in Africa, unless you address the issues in Africa, we're on the same planet, and the effects, what happens in Africa is going to have consequences elsewhere also. And I think this pandemic has shown us that. Even now, I think this is our first priority. We think is vaccinate people in Africa. So getting vaccines to the region is imperative. But looking forward, as we grapple with the next big seminal challenge that the world faces, climate change, I think it's really important to take into account the climate adaptation that African countries need to do. We really are hopeful that we don't lose sight of this. We don't lose sight of this as we go forward. We know the region is going to face some of the biggest effects of climate change. Not having contributed any to global warming. So there is a climate justice issue there. But even separate from that, I think, given how much potential, how much biodiversity there is in the region, maintaining that is in the interest of everybody. So, I'm not sure this is a case where the region is so much looking for handouts, but rather needing to receive, what it needs to, given its limited contribution to climate change that we're seeing. So I think that reframing will be really very important.
Final question for you. Given the uncertain trajectory we have here based on the pandemic, the access to vaccines, climate change, it feels like the region is one shock away from a real catastrophe. Is that your sense that, if the resilience doesn't come quickly enough, there could be a real crisis in the region?
Look, I remain extremely optimistic about our country's outlook in the medium to long term. We are going through a very difficult period, but I have no doubt, given the kind of dynamism that you see in the region, the potential that we have in the region, the demographic trajectory that we have in the region, the upside is just unbounded. And I think, it really is just a matter of time before we are back to the pre-crisis growth trajectory that many countries had. Will it happen automatically? No. That's why where reforms come in. And if external financing can come in and facilitate these reforms, make these reforms happen sooner, the sooner the region can be on the growth trajectory. But I have no doubt that the future is very bright. And I say this for one reason, really. As somebody that started their career in the early 90s, from that low level of, from that low base, you see what we've accomplished over the last 30, 40 years. In the political sphere, think about transformation in South Africa, in the economic sphere. Now that we have a higher, better institutions, better systems, I think the upside is really very high. Again, it's not a given. It's not a given at all. And we have a lot of work to do by way of reforms, by way of improving institutions of accountability. But I have no doubt that, subject to that, our region, our countries, our people will prosper.
To quote you as you started this interview, jobs, 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 and more jobs. Abebe Selassie, Director of the IMF's Africa Department, thank you so very much indeed for making time for us today.
Thank you, Sherwin. Thank you for having me.